So it's all good and well selling for $1 billion.
The institutions you're competing against are, compliance departments bigger than your entire company.
Is I wanted to sell to Amazon for $1 billion because I saw Twitch do it. And it basically is like, if you want to be different, if you want to generate alpha, you have to be willing to look silly. We've gained the confidence to charge what we're worth.
What did you know about yourself at the very beginning that made you believe that you could, enter an industry like this?
Get a no fast. Don't let people just tie kick you.
Before we get into the system you've built, I want to ask something that most interview people have not asked you, right? Because you have your background in jewelry manufacturing, and then you've entered into the most regulated industry.
Yeah.
The question isn't about how you did it. The question is, what did you know about yourself at the very beginning that made you believe that you could, enter an industry like this?
Yeah, it's a good question. It's so refreshing being on a podcast and having it so well prepared and stuff. So you guys are doing a really great job. Yeah, I think I have this kind of slightly toxic trait where I think I can kind of pull anything off. And I think that helps, I guess, when you're going into a larger stage. But yeah, you mentioned my jewelry background, and that was really great for just having the time, the headspace to actually learn from podcasts and books, audio books, for many, many years while I was kind of going through my apprenticeship and then working for organizations, and then finally, running my own manufacturing business, which was really just a sole tradership.
Yeah.
And then my passion was technology and gaming. So I played esports at a professional level. I didn't understand why everyone wasn't as motivated as me.
True.
So I built this platform called Uproar.
Yeah.
And that was to like gamify and basically incentivize people to kind of do more, go further. And I guess now, kind of having lived a bit more, a little bit longer, and been through some stuff, I guess like it could have been anything, right? Like I was just I didn't realize that I was motivated. And I think partly because through education, I wasn't seen as motivated by the institution of education.
Okay.
Right.
No.
But it was because I wasn't interested perhaps in the structure and the subject matters, etc., or the way they'd been posed, right? So I guess it's kind of like I actually was, in fact, motivated and able to do stuff. And I learned that through gaming, ultimately. Gaming and esports.
That's interesting, because I think me and my co-founder are equally into gaming as well, but I think we don't get enough time to play the games as much as we want to now because of the work and the things we do.
Yeah.
But if you talk about yourself, just going a bit more deeper, what is that one thing with people within the finance background told you that you couldn't do it or couldn't be done, but you still went away and did it anyways?
Yeah. So I think, well, it's a really good question. I didn't get to the finance bit, right, which is the actual leap from kind of something very traditional and manual. It was manual labor ultimately. To technology and gaming, to then obviously into finance. Now, I'd had raised money through Uproar. I'd been to San Francisco and grown the business and made partnerships with international publishers, grown the user base to over 450,000 users. And sold it to a billionaire, right? So I had got some confidence from that process, and it wasn't the outcome that I wanted. I went into that with a very naive view, and I think a lot of founders now in this day and age have this naive view, which is I wanted to sell to Amazon for $1 billion because I saw Twitch do it, right? And I wasn't actually thinking about building a good business. But I had some confidence from that. And I knew I was an operator, and I knew the difference I had from finance people was, especially like wealth management, like think kind of advisors or financiers, they're very theoretical in business. And I guess I had confidence to know that actually I had an edge in that area where actually I had operated across many different like industries, you know, I understood arbitrage from the jewelry business, and building systems, then the gaming and technology and esports, which is, you know, you're kind of there's not really a defined outcome, right? From in esports or gaming, you're playing against other people that are going to make their own decisions, and you do your best with the information you have.
True.
So I just figured we could do it, and I had teamed up with a great group of people. One of the smartest people I knew, we co-founded the business with, and started kind of building the tech and building back testing systems and algorithms. And then Ab and Nathan from they own Potentia, and they were early investors in Henry. And Ab came on as a co-founder and has been operating the business since. So we had a really great founding team, and we had a vision that really was different from everyone else, which was that we were going to do this thing for the next 65 years.
Wow.
And that's the difference.
And what made you think that?
Because I'd done the flash in the pan, right? I built this thing, grew it, growth at all costs, user growth at all costs, get to the next milestone so you can raise some more money, tell a narrative that you want investors to hear, because you know that's how you actually get the capital, but that might not be aligned with what you actually need to do. And we decided we wanted to build our life's work.
Interesting.
So beyond Eccuity as a holding company, where we have a portfolio of 8 other companies where we have an interest in, and then we have the core financial services business and the platform. So we're trying to build an AI native Berkshire Hathaway, and we think that in 65 years, you know, we will have compounded into hundreds of billions of dollars of market cap.
And if I take it back to the time that you kicked off this program of Eccuity, what did you actually do in the first 90 days to build something real that no one had, even thought about in the industry, to build something like this?
Yeah, so we started off with like the idea that, the big thing that we went for was, especially like, and it's got better, especially like when we started, like there wasn't, for retail, there wasn't actually a consolidated way that you could actually properly manage risk, because you may have 3 or 4 different accounts that are not connected, and how do you like cohesively do that? So we were very focused on how do you actually, and this is actually somewhat from my jewelry background, how do you build a system and then actually stick to it? So how do you build a manufacturing process to deliver 500 rings a day? And it's 6 steps. How do you actually come up with a plan for your wealth and your asset base and your portfolio construction? And beyond that, what other equity do you own? Right? Do you own private, do you have a salary? Well, your salary might actually be worth, if it's a very secure job, it might be worth, actually, its terminal value might be 3 years of your salary. Now, your job now might be a multiple, actually is worth to your household a multiple of the annual income, right? Your actual job. It's an asset. You might own a home. You might have valuables, collectibles, whatever it is. So we wanted all of that to be in one place. And that was I just wanted that for me.
No, that's interesting. And when you talk about, understanding that process, that how you're going to bring in what you learned from the background, what made you think that that's going to actually work for you? Because I'm sure it's not going to be that easy to bring something as a skill, or that you learned in the background, or even the manufacturing side that made you learn, that would apply. What made you think that they will absolutely stick to this program or to this platform that you're building for?
I mean, it's hard. Like a lot of investors, and I've been guilty of it too, like don't stick to their plan. Like, at the end of the day, we're dealing with humans. But what we've created as a framework, and what we're creating as a business and as a brand and as an institution, Eccuity and Medition, is, we are built for founders, business owners, and high agency people. Like that's who we're built for.
True.
Like, we recognize that, mortgage advice or KiwiSaver advice is one-dimensional, because it's going to the outcome of the product that's right for the customer based on the advice given, right? Or the right mortgage. Business owners, founders, high agency people, they're dealing with things where they may need help, where it's not advice because it's not a product. So our real ethos is around being product agnostic. That's why we've got the platform where you can have all your assets in one place. Because we don't care if you've gone and put $1 million in a term deposit with KiwiBank. In fact, we've built our business model, the membership model, around not needing the assets. You know, if you think about a traditional financial service here, and here's our edge, right? Think about a bank, think about a wealth manager that's charging a management fee, right, in this one-dimensional way, and it's very, very effective, right? Australian banks are highly profitable. Wealth management in this country is a rort, but they have this tail risk, and the tail risk is that they build their operating model around their net interest margin and their balance sheet, or the management fees that they gather based on the assets under management that they've gathered. So we could have all of our assets leave our business tomorrow, and we still have the same amount of revenue, because we don't maximize charging for the assets under management. We maximize through subscriptions and advisory. So it allows us to be aligned with the client. Well, we don't need to push you into a fund, or we don't need you to necessarily trade through us. You can go trade through Sharesies. You'll pay a lot more, but maybe that's right for you. Maybe you trust the brand more. You feel safer with them, even though, you know, perhaps we do have a competitive offering. We don't need you to have your assets with us.
But then, how did you understand that this will be one of the differentiation between you and them? Like, is there that you guys had?
Because their business model is built around trading or assets under management, right? For them to grow, they need to basically be an asset gatherer. And I actually fundamentally believe that that's what's gone wrong with finance and wealth management. If you think about banks back in the day, you know, private offices, etc., it was partnerships. Everyone had equity, right? So everyone had skin in the game. You know, the whole partnership gets affected if there's a mistake or something like that, right? And we just wanted to build a model that wasn't like that, you know. And we kind of took a lot of inspiration from Berkshire, but also from the businesses they invested in, like Costco, right? So Costco basically charges you a membership, which is actually a barrier, right? It's like, hey, go get your photo taken, pay us a bunch of money every year, and then what we'll do is we'll subsidize the cost of your transacting, which is buying the stuff at Costco, because you've actually bought a membership. And we know, because you're paying an annual membership and you went through that effort, that you're probably less likely to shoplift, and you're probably going to be a really high quality client. Same with our membership model or our advisory kind of regime, our ecosystem that we're building, right? Which actually goes beyond, I would say, wealth and finance into like business ownership, like entrepreneurship, etc.
But then, how did you understand that? You know, because you guys talked about a bit earlier as well. There was the one that you built as a regulated industry, and when that was unregulated. What is that first thing that you built that wasn't, you know, wasn't legal to launch, but yet you just, you know, you did it because you know that you were on the right track before you had the permission to even operate that?
Well, yeah, I mean, getting the brokerage live took forever because we wanted to offer crypto. It took us 9 months to open a bank account. It was very expensive to do all the, you know, build all the programs, build all the processes, that sort of stuff. And guess what? That part of our business makes next to no money compared to the rest of it. It's a drag on our business.
Interesting.
Now at scale, it gets better, but because we've also gone with the membership approach, we will never optimize. We won't be optimizing for transactions, which is way better for our clients. Because our clients go, I can trade every day or I can trade twice a year. Eccuity doesn't actually make more.
So you just charge a subscription and that's it.
That's it. Well, I mean, up to a within reason. So our top tier subscription gives you $1 million USD of free transacting a year, and it drops your foreign exchange down to 15 basis points, where the average is kind of like 50 to over 1%. So 50 to 100 plus basis points for the foreign exchange.
Wow, that is quite interesting. If you talk about yourself, now you've got the paying customers, you've got the product working, but here's the problem. You've got 8 people. The institutions you're competing against are, you know, compliance departments bigger than your entire company. You know, risk teams, analyst floors, decades of brand, and they have made. What is the exact system, including how you use AI, that lets 8 people compete against the organization of thousands in the market?
Yeah. So I've been going deep into this, right? So And
Go ahead.
And what I've been going deep into is capital, right? So we've got an event on Tuesday, and it's called, it's basically, we've got a panel in there called Capital Reconsidered, right? So now I think about capital in three ways. It's human capital, computational capital, financial capital. Right? Now, most businesses, if they're past Series B or C, they have an incredible amount of technical debt in those three capitals at the moment. Smaller businesses in the seed stage and, bootstrapped businesses have basically no technical debt in those areas. They're all equity. We're basically all equity. We've got no debt. We have like probably $15,000 of liabilities on our balance sheet. Like, we are so lean, and guess what? If you have no technical debt, just like financial debt, it's very hard to blow up, right? You can continue to play the game. And I think especially in financial services and anything where there's a lot of regulation, a lot of trust that needs to be built, is you need to survive for a very long time before people are really going to take you seriously. Especially if you are actually joining established incumbents, which we are, right? Our core platform and core financial services business exists in different forms, and there's hundreds of billions of dollars, I believe, in New Zealand under various forms of management.
Interesting. So basically, what you're trying to say is to make sure that you're not burning a lot of capital in the initial stages and have a plan to sustain longer in the business if you're competing against the big boys.
Everything's arbitrage, right? Everything is a form of arbitrage. So if I'm able to go and use, a cluster of agents and burn $200 of compute, spend 50 hours myself, and output a piece of work that then is able to generate, let's say, 300 leads, then like that's a huge arbitrage, right? Because you work out all the different ways in which you would have created that output of 300 leads. And I think that a lot of people are like, hey, I need to raise money, right? They focus very much on the financial capital being the main barrier for them. And that's fine. Like, you may be constrained by capital, and that may be a real issue for the business. But in a substream, you need to think about, okay, well, how do I get to the next stage? How do I do the next thing that gets me one step closer to the state I want to be in one day?
But isn't it that's the problem with most of the founders, right? I mean, right now, all the people who are in the beginning of the entrepreneurship journey, that having that kind of finance or having that kind of availability of capital or money is always the first thing that gets looked into. And the rest of the thing, you'll survive, but they put money as a barrier to survive. What do you tell to those people in the beginning of their journey? How would they, look at the bigger picture, but at the same time avoid that kind of, let's say, the first initial barrier that they create themselves? What would you tell them about it?
I mean, you just need to basically take a bite at the apple, and then another one, and another one. And you need to work that out. So you need to basically go, I want to build a platform where I can track everyone's assets and people can create model portfolios where they can basically create their own ETF or KiwiSaver kind of fund-esque thing in a self-directed way, and then invest it regularly. Okay, right. So those are the things I want it to do. What do I need to do? Well, I'm probably going to need a way for connecting the things they use and the assets they have. Okay, that looks like a task, right? I'm then going to tell an engineer, but also now I can actually delegate that to AI. I can get a scope built from AI. I can then review it. And that's actually tokens that are essentially hours of time that someone would have spent doing that. So now I get to choose where I query. Do I query a team member? Do I query a system? Do I query an agent within our organization to get something done? So it's like, hey, I need to be able to do stuff. And then I need to work out what are the small little tasks that I need to complete on a day-to-day basis. And I'm going to go out every single day. And all I'm going to worry about is the 7 things that I've put on my list. I'm going to try and do 5 of them.
But then what do you put, like, top 2 things for these people to, based on your journey, based on your experience, what are the top 2 things that you would recommend to keep always in mind for these guys to keep that, live it for the next day sort of, that kind of, because initially that's their plan, right? It's living for the next day.
Yeah.
So what are the top 2 things that you recommend to those founders and entrepreneurs?
Yeah, I mean, early, you need to get to market as soon as possible. That is big. Now, in a regulated zone, there are certain pathways for different types of businesses, but ultimately you want to get to market as soon as possible, and you need customers giving you real feedback. Like the great thing about Uproar was that we got so many clients register so fast. Like we had so many people like signing up. Like sometimes I'd wake up with like 5,500 new users. And like we might have spent $40 to get those users through through an arbitrage, right? And at the time, the arbitrage was influencer marketing. No one was doing it. You could get videos in gaming to go viral, and then you could have your product placement. No one was doing it at the time. We're spending $40 and getting 5,500 users. So what's the arbitrage at the time, right? So you need to really think about, okay, what conditions can I win in? Because like you say, I don't have a team of 15 compliance people, serving millions of customers. Think about us right now. I mean, Eccuity, are we going to put billboards on buses and run millions of dollars of ads? No, because we can't beat Sharesies or Kernel or any of our kind of theoretical competitors by going dollar for dollar with them. Same with Uproar. We were 8th in the world in terms of gaming platforms and like tournament platforms at our peak. And we had raised 1/20th for everyone else in the top 20.
Interesting.
Right? So
it is definitely. So in terms of right now, like if we, like one arbitrage is about the AI everybody's talking about. But what is that second? Because I'm sure people always forget the second. People are always behind AI, which is right now the arbitrage market.
Yeah, well, actually, it's the arbitrage is going back to those capitals, right? So in human capital, who are the people that are actually really onto it when it comes to adopting those technologies? That's an arbitrage, right? The human capital there's an arbitrage there. There's relationships and taste as well, right? So relationships. The best benefit from our platform is that I've made 240 friends years, right? Like that's cool, and I know that has value.
Absolutely.
What would another, like, so there are these arbitrages that you can get. Is there a way that you can get a R&D grant to start the business? That is an arbitrage of the sorts.
That's interesting.
And I guess in the sense it's knowledge arbitrage, right? You're like, you may know something that other people don't know at that moment, and that's great. How do you implement it is always the hard part.
Yeah. And just for people who doesn't know what arbitrage means, it's what do you tell them? Just in a simple layman terms, because there will be a lot of watching who may not.
So a great example of arbitrage is I'm a big poker player, so I play poker tournaments, and there was a player that had come over from Australia, and he wanted to obviously buy into this tournament, and he only had Aussie dollars. And he goes to me, he goes, "Oh, I've got 100 Australian dollars. The machine's not working. I'll trade you 100 Australian dollars for 100 New Zealand dollars." Well, I know that there's like a 10 to 20% value difference between those two, and I was like, hell yeah. So that's like the simple form. If someone offers you $1 for $1 New Zealand dollar, you would take it. So arbitrage is like, buying something on Facebook Marketplace for $10 and selling it on Trade Me for $35. And that exists everywhere, everywhere,
no matter where.
And it can be in what you're doing, who you spend time with.
So in a nutshell, I mean, the way that you put it up, I believe that you don't need to beat the big competitors out there by dollar to dollar, as you said, but you got to beat them having an advantage that they can't offer to other people.
You have to play to your strengths, right?
Yeah, play to your strengths.
So I've got a few cool realizations lately, right? So I'm a jiu-jitsu brown belt, and I love training. It's changed my life. I try to train at least 4 days a week. And I'm a small dude. I'm about 61, 62 kilos. Like, I'd train with people that are
How
over 100
kilos
kilos,
matters
right?
if you are doing jitsu.
So I'm not going to play like someone that's, 95 kilos. I've got to play to whatever strength I have, and it's the same with my son's playing soccer competitively. He's 11. And, one gripe I have with the coaching is that they're asking the players where they want to play. And I'm like, put the players where they're going to thrive, because they don't necessarily know where they want to be. And it's just that piece of like running your race, not running like the race that is working for someone that may be different. So it's kind of trying to really identify like, what are the win conditions for us?
Sure.
Not, there's this one way to win and growth. You just need to grow really fast and you need to do it like the company over there because it worked for them. It's like, what are the conditions in which we will actually outperform on a relative basis?
Yeah.
And I think that understanding actually public markets is such a great benefit from understanding those dynamics. You get to really understand that through public equities because it teaches you with high frequency.
Yeah. And equally, I think, if you look at us from an IT world, you always talk about, there's a couple of ways you can always identify what's going in the market. And we talk about market insights, right? One, you talk to the vendors and go to these vendor networking events that tells you what's going in the company itself. But then you talk to the customers and the partners underneath them. Then you get what's market situation looking like for that particular product.
Totally.
And I think that is equally telling you that you can do the similar approach for every individual business as well. If you have a selling point or standing out point of your business, just go out there, have a chat with the company that you're working with, ask them what it is. It's just simple as asking a couple of questions. What's the company doing? What are the plans for the next 6 or 7 months or 12 months that are doing? And then gathering that insights from the people on the ground level and putting it into implementation.
Totally.
That's what I think as well. I was reading this kind of fun article when I was going through your information as well, and I came upon this kind of a global, I don't know if it's a global report or global show, but it's called 2025 SPIVA scorecards. Have you heard about them? It tells you about how the fund managers are working, and tells you how was the success ratio every year with these fund managers.
Yes.
And I was reading through and I bumped up on these numbers. They were talking about how 74 to 80% of the active equity fund managers underperformed their benchmarks in 2025. So what do you think? If that is the case and that is a record that has come on kind of a report, what is the real reason that you believe most fund managers underperform?
Yeah, so that's a good question. Well, I think the dynamics of the industry have changed quite dramatically, right? So the industry rewards asset gathering. That's why you would see actually quite a shift. If you look at Sharesies' strategy, right, there's been a shift like more towards fund marketplace than investing platform. I know they're going really wide as well with offering, so they actually can offer a lot of different things. They can bring a lot of versatility to their clients. But really, if you look at their kind of core strategy that's working and commercially like really winning for them, it's that they're going to actually become more of a fund marketplace, which is what they originally disrupted in some ways, right? So can you repeat the question?
Yeah. So what is the real reason?
Oh yeah, active managers.
Yeah.
Thanks. Now, so I guess I'm going to preface that with, so asset gathering, right? So if everyone's asset gathering, they have one thing to worry about, which is the benchmark. So what does that actually do? That actually just drives everyone further towards beta. So actually people just get closer and closer and closer to the benchmark because they don't want to look silly.
True.
But the only way you can actually generate alpha, generate returns, is if you dare to be different, right? I beg to differ. You know that term? There's a great memo by Howard Marks, and it's called I Beg to Differ. And it basically is like, if you want to be different, if you want to generate alpha, you have to be willing to look silly. And obviously we live in a country where there's a systemic issue around tall poppy. So that means we all sit on the fence, and fund managers and active managers have to optimize towards asset gathering. yeah, making sure they don't look different.
So how do you avoid this? I mean, this is you have almost majority of our founders who've come in, they felt this, tall poppy syndrome. How do you get over it?
Yeah.
Is there a way? Is there a process? Is there a step? What is it?
Oh. I mean, it's the more you can really know or feel like like if you can really do the work, right? Like if you can like put in the effort and know that with the information you have, like you have a really good sense of what's going on, it gives you a lot of confidence and it allows you to kind of, not take personally the certain views or, potentially people saying, oh, well, you can't achieve that. I'm saying I would like to do this for 65 years and generate hundreds of billions of dollars of market cap. Like, I can't forecast that happening. I just have to take single steps and kind of get there and try and have a good strategy and try not to get diluted and try and build equity, right, for our shareholders. I can't tell you how I'm going to do that though. I just need to keep playing the game.
True.
So that's really important, is basically trying to really know, and then not taking it personally. Like, we all kill them with kindness, right?
True.
Like, at the end of the day, if someone's getting angry in traffic because there's traffic and they're just like annoyed that they're stuck, like, you kind of have to let it wash off your back, right? Like, you can't control that there was traffic today. And I can't control if someone thinks that it's arrogant or ridiculous that we would think we could compound over the next 65 years into a couple $100 billion of value, or we're just working on a really interesting capital raise at the moment, and that capital raise, when I say it, we're actually working on a $50 million raise at the moment. That sounds obscene when I say it. People are just check out. But I really know what we're working on, and I know how we can execute on it. Now, will we? Maybe not. But yeah, but people are going to go, well, you can't do that. But if you put in the work to actually know that, well, actually, I've broken it down to these 50 bite-sized steps, and I'm going to just do my best to do some of those steps. And if the outcome is not what I wanted, that's okay, as long as I've made some good decisions with the information I have, and I've got up every day and I've done those 5 steps, and I've got kicked in the tummy and punched in the face, metaphorically, most of the time when building a business. But I went to sleep, felt like terrible when I went to sleep, but I got up and I did another 5 steps.
That's true. It is interesting. It is quite, the way that I believe it is how you take it. I mean, initially when you're building a company, there's lots of things that are not going to go your way. They're not going to be the idealistic next best step that you want to take, but you still got to take it. We move towards the last part of our chat today, Charles. And as I said, this is a question that we never ever skip, and we'll keep it as it, and because we think it is much more of an overall value that provides to the people. What is the scaling secret? The one thing most people in your position would never say it out loud.
An order of magnitude larger on our AUM, maybe even 2, and we could have been much further along now than we are in some respects. Now, we've built an ecosystem of holdings. We've done some really great work, and I'm actually really happy with where we're at. Where were my expectations 6 years ago? Different, right? But yeah, I mean, I think for me personally, and I can only really talk to my own experience in this, is that for whatever reason, whether it be life experience, whatever, I don't feel like I, in particular, effectively charged for the value that we bought in anything that I was doing, like historically, right? I feel like I let myself, there was obviously a fear or some sort of barrier around basically having the courage to actually charge my value or charge our value, and I guess kind of, have the confidence to get what you're worth. And this year we've had a huge breakthrough in our business, and the revenue's growing crazy. We've reduced our operating expenses. More and more people want to work with us. We've really identified who we serve and how we sell and what the offers are. And we've gained the courage to say, this is us. There's loads of other stuff out there. And most importantly, we've gained the confidence to charge what we're worth. And that is the biggest breakthrough for me personally, is to know my value and have the courage to just state that and not bend. Because I think I spent a lot of time through Uproar and also the early days of Medition and Eccuity bending to tire kickers.
Interesting.
And I won't do that now. I have no time for it.
Right.
That also goes for sales, right? Like, get a no fast. Don't let people just tire kick you. Like, yes, people are busy and don't take it personally, but you don't have to bend to that.
Okay. No, fair enough. I'll wrap it up on that.
Awesome.
And for the people out there looking at us, if you do have money sitting in your managed fund and that you never checked and want to know what you're actually paying in the fees, I think this is the episode. You need to check it out.
Awesome.
Eccuity.
Totally.
Thank you so much.
Awesome.
Thank you so much.
Thanks for having me. It's been a really great episode. And thank you for being so well prepared.
No, I'll try my best. I'll always give my best on that one.
Cheers.
Thank you so much. See you in the next episode of Scaling Secrets.